Hi, everybody. This is Rick Sharga, EVP at RealtyTrac. I am joined today by Liz Faircloth, the co-founder of the real estate InvestHER community. Liz, thanks for joining me.
Yeah, absolutely, Rick. So glad to be here with you.
And we're going to talk a little bit today about what's going on in the real estate market, specifically when it comes to the world of individual real estate investors. Liz, you probably know we just did an investor sentiment survey. And the people who responded said they believe the environment for real estate investing was more difficult, more challenging than it had been as recently as 6 months ago. I'm curious, you're an active investor, you work with a lot of investors. What are you hearing from the people you work with, and what are you seeing in the market?
Yeah, it's interesting because I have the hat on as an active investor. So my husband and I run a company where we focus on mostly acquiring large multifamily. So 50 units to say 400 units would be our asset size. And mostly the, Southeast is our kind of focused area, East Coast, Southeast more in particular. So we've been in that space for quite some time. And I'm going to give you some answers just from an active investor. And then also I work with our InvestHER community, which is a community of women across the country and the world that are investors as well. So yeah, I mean, in terms of like the crowdedness of the market, there is more of a crowdedness, and COVID only increased that. So COVID, it's interesting. I got interviewed the other day, and they were comparing, the crash of '08 and to the time of COVID, and there were so many differences on so many different levels in terms of real estate investors. So number one, we're finding just so much more of a crowd of investors, from multifamily to vacation rentals to single family homes to every sort of niche as well. So in terms of more people wanting to invest, more money to invest, because people, during this time too, maybe made some different investment decisions and said, okay, we're going to pull some money here, we're going to put it into real estate, or especially multifamily, and in particular, in terms of stability of multifamily and the different things we've always known, but more people have gotten to know, especially again, the onset of COVID for some reason. So more people, more money, and less deals, right? So the competition has increased, which then therefore inventory has really decreased, especially on every angle, right? We don't invest in single families, but that's certainly that has happened there. It's happened on the larger project perspective. So yeah, I mean, those are kind of what we're experiencing. Just to give you a real life example, we have not closed on a property this year. We have now 8 properties under contract right now. We have a ton of properties that are like hitting our, our plate right now and under contract. But for 11 months, it was really quiet. Tons of offers, tons of best and final, and didn't win any deals. I think
That sounds remarkably similar to stories I've heard from other investors across the country, and a lot of that in the single family space, as you mentioned. In fact, the two biggest challenges and obstacles that our investors in the survey cited were the lack of inventory available for sale and rising prices of the properties, which as an investor, makes it sometimes hard to pencil out a deal and make it work.
Yep.
So it sounds, and that makes a lot of sense too, because lack of supply plus more competition tends to drive up prices. And so you've not closed on any of the deals this year. That's fascinating. Until now, where you have 8 deals about to go live. Mm-hmm. Has it been because you've been outbid? Has it been because of other factors, people changing their minds about selling properties? What's typically been the reason you haven't been able to close a deal so far?
It's interesting because, it's a mix. And here's the other silver lining of how we've been able to get some properties under contract. So I'm going to answer that in a couple of different ways. We started going into different markets, like maybe a market that we didn't have broker relationships as strong as we had in other kind of submarkets, if you will. They don't know us yet, right? And what does a commercial broker want to know, especially on the size of building, any property, but especially on the size, small, medium, large multifamily property. Are these people for real? Are they going to close? Because they're getting flooded with the amount of institutional money. Money's not even they're not even worried about that. They just want to know that these people can actually close the deal and get it to the finish line. And there's a lot of more than just money. There's a lot of reasons that people don't close. So, new markets, we were, getting to know those brokers, building those relationships. That has so much, there's so much That's such an important piece to this business, especially on a larger multifamily kind of strategy. So in the newer markets that we were playing or looking to get into, the challenges increased, right? We didn't have the reputation as, say, the markets that the brokers knew us and that we had previous relationships. So the irony of all the deals we have under contract right now are literally all in markets that we already have buildings. So none of them are in actually a new market for us. They're literally, the buildings are neighbors to our other buildings. So, and those have been cultivated, not this year, but that's been in the making for a few years since we've been in that market. There's one property that is in Pennsylvania that we had our eyes on 6 years ago. 6 years ago. And it's actually a smaller building for us. It's a 37 unit, but it's a great property, literally a mile from our other property that's about 50 units. So it's just interesting, right? So that's the silver lining, is to build those relationships at any time, especially now. If you're getting outbid, build those relationships with the brokers that are focused on your niche, of course. I'm in multifamily. And that goes so far in our market, and that is in any market for that matter. But it is interesting. We got outbid and didn't get the buildings in the markets that we don't have any relationships or didn't have them yet.
That's interesting. And you raised 2 points I wanted to cover before we wrap up today's conversation. One was about institutional investors, and I do want to come back to that one. But the other, I just want to emphasize the point you just made, which is a lot of investors, individual investors in particular, get into the market thinking that realtors are the competition, or that all a realtor will really do, or a broker will really do, is add expense to a deal. And I can't tell you how many times I've talked to investors who look at realtors, look at brokers and agents as their lifeline.
Yeah,
as the people that will bring them the deals,
yep.
Help counsel them on pricing and other terms. And so it's interesting to hear from you that one of the obstacles moving into a new market is that lack of existing relationships. And it's important for people who are listening today, who are watching this, to understand the value that a real estate agent, whether on the commercial space or the residential space, really can bring to the party, and all the help they can provide, especially as you're starting out your investing career, when you don't know what you don't know and are liable to make some mistakes.
Absolutely. And it only increases because, they have relationships with the local community in a way that investors will never. And even if you own, 25 buildings, yes, you have relationships, but they know the local fill in the blank in a way that is so valuable, especially out of state investing, which is we're focused on markets that we don't live 30 minutes from anymore, where we got our start. So, that becomes even more important, like the localness of what you're doing. And you have those local kind of key players and people that you trust and like and have your back. Of course, it's a business relationship, but it's important to have people that you trust and respect in those local markets.
It's equally important then to make sure you're dealing with the right people. So you need agents or brokers with an established track record who have the right kind of reputation. It's not just any real estate professional. It's the ones who actually do have those connections, those ties into the community. But the other point I wanted to make before we close up this segment is, you mentioned institutional investors, and there's been kind of a running theme through the media for the last couple of years about Main Street getting gobbled up by Wall Street. The investors in our survey, interestingly, have been saying pretty consistently now for the past two surveys that they're actually seeing more competition from traditional consumer home buyers than they are from the institutions. And in your market, you're dealing with multi-family units, so you're probably not seeing a lot of individual investors. But I wonder if there's an analogy there. I wonder if you've heard the same thing, but B, I wonder if you're also dealing with smaller investors and not competing with Blackstone and BlackRock and Starwood and all the big players, but really competing more with local investors.
Yeah, it's interesting because it's almost two perspectives. We're actually made a ton of offers this year. We're actually selling some of our assets because it is a good time to sell. And so one of our buildings in North Carolina in particular, we're selling. And, we knew that we knew the building was just performing really well. It's a strong asset. We took it from, tough situation, really, 60% occupied, actually occupancy to 98% during COVID. So it's just a building that's very strong and performing very strong. So we knew we'd do well, but we got 30 offers. And I would say at least half of those offers were from, extremely credible companies. I don't know about Blackstone. They didn't, they didn't bid on the property, but when you're looking through the resumes, you're looking at the operators, because that's what you're looking at too. The company is just really a group of operators. Yep. What are their resumes? What is their, that's what you're looking for, not just the money they're looking to put up. Their terms, of course, is critical, but the people behind it, and that's what you're looking for. And my working with our team, there was multiple teams. It wasn't like, wow, this one really stands out and the rest of them are new. Or so you're seeing the experience level was very high in terms of their kind of credibility, their ability to close, quite honestly. And that wasn't just a few of them. It was a number of them. You also saw some people that, were just kind of like, coming to the party, and this is their first deal. And it was very, very obvious, right? In terms of they're just kind of just being a little more naive in how they wrote things and just, just what they said and how they presented themselves. So that's been our experience on that end. In terms of the other side of it, us getting outbid, right? Us being those people who didn't win the, get the property. We got to best and final a handful of times. So it wasn't like we were completely on like we were the 15 out of the 15 offers, what have you, but we were definitely we were in the best and final, and we just kind of got outbid. And I do think money, terms is important, money is important, your resume, the credibility of being an operator, but that broker relationship really does make a difference too, because they vouch for those owners. They're going to bat for those owners. So I can't, not that we got talked badly about, but that does make a difference in terms of like the check marks. But yeah, I mean, I don't, in terms of like more of like a small single family homes or small multis, I'm not sure what that experience is, but I'm, just from a larger multifamily perspective, we have seen more money. I will say this too, Rick, we've seen a lot of, folks and their teams coming from New York. So they're based in New York. They're based, in California. So they're coming from markets that they're not investing there. They're investing, more in the South or the Southeast, and those more affordable areas that a lot of people are also investing. So that's something we've seen more of, teams coming from like, New York, actually.
Lots of good information. Really appreciate you spending some time with us today, Liz. We're out of time for today's conversation. If people are interested in learning more about the real estate InvestHER, there's a website, therealestateinvesther.com. As you can see the spelling behind Liz. Feel free to check out our information on RealtyTrac.com on our blog. Follow us on LinkedIn or Twitter. But thank you again for spending some time with us, Liz, and we'll definitely be continuing the conversation.